Pablo, good to see you. How you doing? How you been? JB, good to see you as well. How you doing? Good evening, brother. Joe, good to see you as well. Evening. How you doing? How you been? Free Feather, good to see you as well. How you doing? Evening. How you been? Artistic, good to see you as well. Hi, Miles. How's things? Things are great. How's things with you, Artistic? How you been? Hi, Miles and CMF. Good to see you as well. George, how you doing? How you been? Funky brother, good to see you as well. How you doing? How you been? How's your back? It's better. It's a lot better, I'll be honest. My back is doing a lot better. Also, the market seems to be slowly recovering itself, which it should do anyways. Within a few days, as I said, we should be back to normal. Evening, CMF. Let's go, Funky brother. Miles, CMF, good to see you as well. Davey, how you doing? How you been, Davey? Hi, Miles and CMF. Dennis, good to see you as well. How you doing? How you been? T, good to see you as well. How you doing? How you been? Hi, Miles and CMF. Stormy, good to see you as well. How you doing, Stormy? How you been? Okay. Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing? How you been? Evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Don't trip, buy the dip. It was actually a tweet that was also sent out by Eric Trump, if I'm not mistaken. He put out a tweet and said, don't trip, buy the dip, or buy the dip in that sense. But yeah, definitely. I mean, what we just went through was pretty much a shakedown, you could even say. But it was all related to the Bybit hacking situation. The tariff situation is weighing in a bit. But tariff situation is, as I said previously, it's short-term volatility, long-term better for the market space, I'll be honest. Hey mate, how you doing, Dale? Good to see you. How you doing? How you been? So much manipulation, it's unbelievable. Yes, it is. I'll be honest. There's a crazy amount of manipulation happening, but that's when you get with the amount of institutions coming inside the crypto space that want to enter the crypto space. More money means more manipulation, is just how it works. But that's only because we don't have regulations, as I said previously. The faster we get regulations, the less manipulation there should be inside the market space. But all of that is because of Gary Gensler. Gary Gensler focused so much on scrutinizing the legitimate part of cryptocurrencies or cryptocurrency assets that he let the manipulation side of crypto completely take over the legitimate side. But obviously now with a Trump administration or new CFTC and SEC, we are seeing essentially cases being dropped even more now. I mean, today we had the Uniswap case being dropped. So while the market is being manipulated and is going all over the place by itself due to many factors and some microeconomic effects, on the other hand, cases are still being dropped. Uniswap was dropped today as well. We have institutions want to get more involved, which we're going to go from tonight's live as well. So there's a lot of things still happening behind the scenes. That's all positive. But again, it's been overshadowed by the entire manipulation situation that's going on. But as I said, this entire thing is going to last a few days and we'll be back to normal. The market will slowly start recovering itself, essentially. But yeah, so much manipulation is unbelievable. I agree 100%. Good evening, Miles. How are you? I'm doing great. Kelly, good to see you. So how you doing? How you been? Now, let's start off by saying this. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. I'm the host of this live that you're tuning in right now. And I do this live Monday to Friday where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. I'll be more than happy to help you out. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF Live if you're watching watching this for the first time ever. If you're a regular, let's go CMF. By the way, thank you so much to everybody right now that's retweeting this live, because I'm getting a lot of notifications from X. So thanks so much to everyone that's retweeting this live right now, who's liked this live on X, who's put a comment outside the live on X, and hashtag XRPOMI. And thanks so much to everyone on YouTube who's watching us right now, as well as also like the live and put a comment outside the live as well. Now, before we go for any of the news talk, before we go for any of the news token points that we're going to go through on tonight's live, let's consider the comment section first. But the news that we are going to be covering on tonight's live is regarding more case droppings regarding the SEC, and a lot of things that's happening in terms of institutions and Bitcoin's behaviors and perspective news to go through from CEOs and executives. But before we go through that, let's go to the comment section first, because I want to get through everyone's questions. I want to see what's in everyone's mind still. Because yesterday, I feel like I did a good job of essentially rectifying a lot of things that were happening, but also why they were happening on yesterday's live. And that you should be looking at the bigger picture and stop looking at the tip of your nose. And the market seems to be slowly recovering itself as well, to be fairly honest. Very slowly, but it is recovering itself. And it has to, because the whole situation with Bybit will last a few days, and after that there'll be another news that will cover the market space in a positive or negative way. But we also have data coming out this Friday as well that's going to have an impact on the market space, positive or negative. Let's see how the data comes out. But yet again, before we go for any of the news talking points, let's go inside the comment section first, because I want to see if there's any questions anybody wants to be answered to help people out even more. So let's go inside the comment section first. Good evening, Miles. How are you? I'm doing great. Callie, how you been? How's things? Dale, good to see you. How you doing? How you been? Military is crazy. Yes. Miles, can you tell me when I can quit my 9 to 5? When you can quit your 9 to 5 depends on what crypto assets you're holding and how much you're holding. Now, that's not an indication for you to, in any sort of a way, tell anyone right now what you're holding or how much you're holding. Don't do that. Don't ever do that. Don't ever tell anyone how much you're holding or what you're holding. But for you to be able to quit your job, 9 to 5 job, it does depend on what you're holding, how much you're holding, and that it's the patience game. So it's the faster the regulations come in, the better chance you have of getting to, quitting your job and just living in retirement of your XRP money or your XLM money, XDC, or whatever else you're holding onto. Sooner the regulations come, the better it is for everyone else essentially inside the market space, to be fairly honest. But the SEC is doing a quite rapid job, to be fairly honest as well. They are dropping more cases one by one, getting closer to that whole foundation lane. Even Miles of CMF, Jason, good to see you. Well, how you doing? How you been? Stormy says, all it did was make me buy more HBAR, XDC, XRP, XLM, and Ondo. At this point, people have no excuse later to say they didn't have a chance to buy at these prices. It was a fire sale. It was definitely a fire sale. A lot of discounts were going on inside the crypto space. Some people had money to buy, some people didn't, but that's okay, because we'll get chances like this happening, because we don't have regulations in place yet, so we'll have chances like this happening inside the market space again. But yeah, it was definitely a fire sale, no doubt about it. Morning, Miles of CMF. Solomon, good to see you. Well, how you doing? How you been? Good evening, Miles of CMF. Good to see you. Orphan, how you doing? How you been? And yesterday's live, I did say we could go down 20%, but it really wouldn't matter because we know we're going to come back up. But we only went down 15% on some assets, to be fairly honest. Now, regarding Miles, is it true that the SEC will declare officially that XRP is a commodity and not a security? It's Orphan, good to see you as well, by the way. How you doing? Solomon, good to see you as well. How you doing? Morning. Regarding the SEC, is it true that they're going to declare XRP is not a security and it's a commodity? Well, the judge has declared XRP is a commodity, technically not a security, let's just say. The judge has declared XRP is not a security a long time ago, to be fairly honest, on the secondary markets. But in the sense of, is XRP going to declare it? You never know. With the new SEC we have, they're very positive towards the crypto space in general. They're dismissing cases one by one. So I wouldn't be surprised in any sort of a way if the SEC does come out with Mark as the acting chairman or Hester Pearson, they both come out, or one of them comes out and says, XRP is not a security, it's a commodity. I wouldn't be surprised if they did that in any sort of a way. I'm not saying they're going to in any sort of a way either, but if they did, the rumor is just a rumor. It's not true in any sort of a way. But if they did, it wouldn't surprise me, to be fairly honest, because the new SEC is very pro-crypto. Even Miles of CMF, Pierce, good to see you. How you doing? How you been? On the 27th of this month, oh, is it because of the meeting that's happening inside the SEC? Let's see what's going to happen. Even Miles and family, Ian, good to see you. How you doing? How you been? Obviously, it'd be brilliant if they did, but it's a rumor for now. Could you let everyone know there is another Joe 90 with the exact same picture I have? The difference between his and mine is he's following 3 people where I'm following around 1,500 people. I'm the original. Yes, I can, Joe. when I just read out your statement as well. So there's somebody that's pretending to be Joe90 on X, and Joe90, the original, basically is very nice on the comment section. He's following 1,500 people. The fake Joe is following only 3 people. Please be aware, people. Thank you, Joe, for letting me know about that. Everyone else as well. Hi, Miles. Is this a big shakeout? Yes and no in a way. Johnny Bravo, good to see you. How you doing? It was definitely a hustle and tussle type of situation, to be fairly honest. The Bybit situation was one of the biggest factors. I mean, the way the market reacted to Bybit was too much, to be fairly honest. It was over exaggerated in a sense, because they only got away with Ethereum, not the entire market space, to be fairly honest. But there's always that essence of they might start selling off Ethereum or essentially buying into other assets and create more manipulation. 1.5 billion roughly is a lot of amount of Ethereum, a lot of amount of dollars to be having in a sense. But it was over exaggerated. The Bybit situation was definitely over exaggerated by far. I mean, situations like FTX was not over exaggerated. You know, a major crypto exchange causes massive fraud. That's not over exaggeration. If when it had the repercussions it did back then inside the market space. But Bybit situation was definitely over exaggerated by a mile. And it was something probably that exchanges needed, and because exchanges had a lot of futures trading happening where there were 50x's, 100x's that they had to pay out on long positions. All those long positions got liquidated back to back within seconds. And in situations like this, stable coins do quite well for themselves as well. USDT did extremely well for themselves because a lot of people sold into stable coins. RLUSD also did incredibly well for itself as well. So did USDC. In situations like this, the market goes bad, stable coins go good, to be fairly honest. But it was definitely a shakeout type of situation, yes. But the whole Bybit situation was without a doubt over exaggerated. And it was just Ethereum they stole. They acted like they stole the entire market space. It was just Ethereum. It shouldn't have reacted the way it did. So there was some over exaggeration going on inside the market space. However, the market space did recover better than usual, and at essentially much more faster pace, to be fairly honest. 5 million Hong Kong dollars. Miles, can we see XRP go under $2 soon? Would be awesome. Anything's possible while we still have no rules and regulations, to be fairly honest. But if it did go essentially below $2, essentially, again, it will recover quite fast. So it'll be like a fire sale situation. When can we expect XRP's green lights? When can we expect XRP's green lights? Well, the first one needs to be the case getting dropped. Now, the SEC is working its way down the, essentially lawsuits that it has going on. They first closed the Blockchain Association case, then the Kraken case, then the Crypto.com case, and today we're going to talk about how they closed down the Uniswap case. It's pretty much just, they're closing down all their cases and getting to the last case, which is with Ripple in that sense. So that's the first green light. When we get to the first green light, Ripple case being closed, the second green light will be the rules and regulations they do come out with. So banks and institutions know what they're doing, what their next move essentially is inside the market space. And due to obviously Ripple's client base, XRP is mostly going to be used by institutions as a medium of payments, or banks by the medium of payments. So regulations definitely be there for domestic and international sense. And that's the second green light. Third green light is essentially being adoption. How fast are we, or when can we expect those green lights? Well, let's just see the first one being very soon. And as I said previously, Q1 or Q2 is what I expect the case to be completely done with. I said this since the beginning of the year. Q1 or Q2. I also said this last year as well, ending last year. Q1, Q2 is what we're expecting the case to be completely done with. There's no point of carrying this case further on in any sort of a way, especially with really, really positive SEC. They're very pro-crypto. They fired 50 lawyers, removed the main person in the Ripple case and the Coinbase case, which now Coinbase is dismissed completely. But in general, we're not that far off from the first green light. Joe, can you share which profile is the correct one in the CMF? As it appears, I'm following both and I can't see which one is the correct one. That's actually not a bad idea. Joe, if you can, inside the CMF Telegram group, put your real portfolio so everyone knows who they're following, essentially. What figure can we see at XRP by December? Consider variable change. Now, SEC drops Uniswap investigation aimed broader crypto regulatory shift, which is a massive positive. But yet again, it's been overshadowed by the entire noise that's going on inside the crypto space. While the crypto space is going up and down, or down in this case, having a fire sale, the SEC on the sidelines is dropping cases one by one. These are all massive positives for the crypto space. Unfortunately, they're all being overshadowed. So here it is. The SEC terminated essentially its 3-year probe into Uniswap Labs, the developers of Ethereum's largest decentralized exchange, without pursuing any sort of legal action. Uniswap founder Hayden disclosed the decision, aligning that with recent SEC closures of cases against OpenSea and Robinhood. The agency initially accused Uniswap Labs, essentially in 2024, of operating unregistered security platforms, but abandoned the claims after leadership changes, and it was when Gary Gensler left. Gary Gensler's resignation as the SEC chair in January 2025 preceded a policy pivot under the new leadership, essentially acting chairman Mark. The regulator established a crypto advisory group and put Hester Pierce in charge, and dropped charges against Coinbase pending commissioner essentially review. Adams essentially criticized the probe's duration and cost, stating on X that federal investigations and penalizing through this process alone is wrong. He framed essentially the outcome as reinforcing distances between decentralized self-custodial protocols and centralized financial intermediaries. The token, essentially UNI ticker, the governance token tied to Uniswap's platform, rose by 5% today, immediately after the announcement was essentially retreated to $8.11 within hours. And the token remains essentially 12% lower over the 7 days due to the whole Bybit situation, and reflecting essentially broader market declines. Now, the SEC's crypto task force, launched in March, essentially has held private meetings with firms like Circle and Kraken and industry observers, suggesting these sessions aim to standardize compliance frameworks for decentralized finance and platforms. Though no formal guidelines have been published in any sort of a way. In terms of regulations, they haven't posted any sort of regulations from the SEC yet, but they are dropping cases, which is a major win for the crypto space in general. Now, Adams has criticized the probe's duration, costs, and everything else to do with it, and Uni, the governance token tied to the essentially asset itself, has been doing incredibly well for itself. But yet again, massive positive news like that by the SEC, dropping cases one by one, overshadowed by the market's volatility. The market seems like it's going to be going essentially into some sort of bear situation. As I explained yesterday, it isn't. What's actually happening is that there's a massive shakeout happening by the looks of it. And on the side, the SEC is dropping cases. Also on the side, major institutional players are getting ready to enter the crypto space and even help out blockchain firms go public. That's what's really happening from the institutional sector. The retail section is looking at as if we're going to go into some massive deep hibernation of a bear market. In reality, we're not, because the SEC dropping essentially lawsuits one by one, dismissing them completely, is an incredible positive thing for the crypto space. But it's not making enough noise because everybody's too focused on we're going to go into some bear cycle. And reality is we're not. We're just in a very, very highly manipulated market space. Because as this whole massive tornado situation is happening inside the crypto space, but the market seems to be recovering itself bit by bit, slowly now today. Later on today, it started to happen. At the same time, institutions, as I explained yesterday, are getting ready to help out blockchain firms go public. If we're going to go into some sort of a hibernation bear market situation, there wouldn't be any institutions from Wall Street like Morgan Stanley, for example, getting ready to help blockchain companies go public if the market was about to die out completely. And the other sense, there also wouldn't be Seattle getting ready to enter the crypto space, start trading on Binance and Coinbase. Those are indicators of where the market space is about to be going, which is institutions. Now, if you go about 4 months back, it was essentially said by Grayscale themselves and Kraken Exchange and Crypto.com Exchange that the next clientele is going to be institutional clientele. 4 months back, it was said that the next clientele is going to be institutional clientele. Well, it does seem like the market is getting ready for institutional clientele because as the market is going through some tornado situation where the retail section might start panicking in any sort of a way, which they shouldn't at all, the next clientele entering the crypto space is definitely, without a doubt, institutions. Because Seattle just made a major announcement yesterday where they're going to be entering the crypto space and trading like Binance and Coinbase, which is massive, $1 billion firm entering the crypto space, or Morgan Stanley and so on. So you can definitely tell institutions are definitely the next clientele entering the crypto space. But it seems like just about they're about to be entering inside the market space. The market space is going through some tornado situation. Now, there was also rumors going around that Lazarus Group, that is coincidentally based out of North Korea, isn't what it seems to be. Now, this part is just a rumor. It's not confirmed in any sort of a way, but I'm guessing some people have started to see this rumor essentially roaming around, where the Lazarus Group might not be what it seems all to be, and that it might just be an inside job with Lazarus Group, and they just want to blame it on North Korea because they know nobody can hear North Korea's voice. That part's not been confirmed in any sort of a way, but essentially they're just using the Lazarus Group name to manipulate the market space. Just a rumor, hasn't been confirmed. But what we do know is institutions are entering. It's a massive positive. SEC is dropping cases, massive positive. Today, they dropped another one, Uniswap case. So while the retail section is thinking we're about to go into hibernation for bear markets, institutions are lining up one by one, helping blockchain companies and getting ready to enter. What does that tell you? Market is going for a shakeout. Institutions are about to be entering. 4 months before, you were told by Grayscale's CEO and executive board members and JP Morgan's analysts that we're going to be entering into an institutional phase of the market space where institutions are the next clientele. And as just about that the institutions are about to be entering the market space is when the Bybit hack situation happened. Coincidence or coordinated? You know, there was a while ago inside the market space, just to give you a little brief, a while ago inside the market space, there was a massive Chinese real estate company. Massive Chinese real estate company. If you were inside the crypto space back then, you would have known what I'm talking about right now. There was a massive real estate Chinese company a while ago, which went under. They went fully under, and it impacted the stock market and the crypto market a while ago. Now, what was interesting about that Chinese company was about to go into bankruptcy about 4 years before it went into bankruptcy. But every year, just as about to essentially go into bankruptcy, there was one Chinese firm that would give it more money, a bank that would give it more money so it could stay afloat. The issue was that Chinese company, that massive real estate Chinese company, was in deep debt. And even though they got more money to stay afloat, they weren't really staying afloat. There were still billions and billions of dollars into debt. And every year that debt grew bigger and bigger and bigger. It almost seemed like they were trying to fatten that company up before they drop it on the entire market space at one particular date in time. Similar to the Bybit situation. As the institution is about to be entering the market space, Bybit gets hacked and it gets blamed on the Lazarus Group. Just a coincidence, maybe. But that Chinese company was definitely planted to drop at one particular time. Same goes with FTX exchange. All these massive drops we've had inside the market space, they all seem a bit odd. The Chinese real estate company was a bit odd. They were about to go under 4 years before they went under. But somehow somebody kept them alive, even though they had massive debts and that grew every year bigger, and then dropped them at one particular time on the market space. And then the FTX situation was also a bit odd, because Gary Gensler was having back-to-back meetings with Sam Beckman-Fried. Yet Gary Gensler had no idea that Sam Beckman-Fried was operating a company with such a moronic way. Odd. And then the FTX situation happened and dumped the entire market space. And then now the Bybit situation, where the exact same time Bybit gets hacked is when institutions are about to be entered the market space. It all seems a bit coincidental. Weird. Or the evergreen essentially shipping situation as well. What I can tell you is anything that involves a lot of money in this world, there's always someone pulling strings somewhere. All you have to do is look at the timelines, basically. Now, moving on essentially to Bitcoin ETFs. But actually, before we go through Bitcoin ETFs, let's go to the comment section first. But again, what I'm trying to say is don't get distracted by the noise. The institutions are entering the market space. So don't get distracted by the noise in any sort of way at all. Hey, everybody. Good to see you as well, Custom. How you been? How's things? What figure? Good, because we need their money. Yeah, we definitely need the institutional money, 100%. What variables would be in play deciding XRP pricing by year? And could this scenario of regulations and shakeouts continue through 2025? The only way the shakeout situations will continue inside the market space is as long as you don't have regulations. if we get regulations inside the market space, it's going to be more difficult for shakeout situations to be happening, or over exaggeration situations. Now, I'm not saying hacking is never going to happen, because it is. Compromisation is always going to happen. I said this 2 years ago. 2 years ago, I said the more we go essentially into this digital space, the more we go into a digital world, hacking and scamming will get very advanced. It's just something that's going to be guaranteed in some sort of a way. And interesting enough, Ledger's CEO today, the highly, essentially cold wallet, one of the top range cold wallets out there, Ledger CEO, comes out today and goes, basically, it's something that I said 2 years ago. He said today, in his own words, that scamming and hacking is always going to be there, and compromisation is always going to be there as well. And he said the more we go into a digital world, the more hacking and scamming will get more essentially advanced along the way. So, which is all true. So hacking and scamming is always going to be there to disrupt the market space without a doubt. What scenarios of essentially manipulation won't be in play is institutional essentially manipulation, because then we have regulations in place and it's just not a shakeout type of situation. Also, regulations will stop random meme coins popping up every 5 seconds. Some people might love the idea of meme coins, but the reality is the more we go into regulations, the more difficult it's going to get for people to create meme coins out of thin air and just dump on the entire market space, because all they're doing is exiting liquidity from legitimate projects, which is bad for the market space. And Gary Gensler was the biggest cause of that. The reason why the meme coin space grew as big as it did and manipulated the entire market space for several years is because of Gary Gensler. Gary Gensler focused so much essentially on legitimate crypto projects, where he let the meme coin section, which is just filled with scams and fraud, get away with everything they can, because his focus was on essentially all legitimate types of projects, and instead looked the other way when meme coins were actually committing all the fraud inside the crypto space. Interesting enough. So Gary Gensler is actually the biggest reason why the meme coin section grew so much, because he didn't bother looking into it even once, and instead put all of his focus and money and taxpayers' money essentially on legitimate crypto projects. Well, the meme coins got away with everything. But anyways, other scenarios of regulations, shakeouts by years, and what price can we essentially expect for XRP by years? And gets 3 green. Honestly, XRP gets 3 green lights. The sky's the limit for it even by this year. And this scenario of regulations and shakeouts continues through 2025. Shakeouts will always be happening, but less under rules and regulations. A lot more when there's a free market space with no regulations. Now, the SEC's seems like the SEC's main task is to drop all these cases first before they establish any sort of regulations, which is a good thing. Because, as I said previously, a long time ago as well, that they need to drop the cases before even coming out with the regulations, because it makes no sense. And which is exactly what they're doing. Mark isn't wasting time and he's waiting for Paul Atkins to come in as the chairman of the SEC or get voted in. Him as the acting chairman, he's done a lot, to be fairly honest. So they're dropping cases one by one. The next logical step for the SEC will be to establish regulations and approve ETFs moving forward, which they're definitely going to do. They're moving at a rapid pace, to be fairly honest. So shakeouts will always be there, no matter what, but there'll be less under rules and regulations, a lot less under rules and regulations. Hacking and scamming is always going to be there, no matter what. So that will always cause disruptions inside the market space. But yet again, if we have regulations, utility has started to happen. Some projects won't be affected by, essentially macroeconomic events or essentially hacking situations, because their utility is being used, unless it involves that particular crypto project. Now, I just brought more XRP. I've been taking advantage during this downturn. Let's go custom. I have a feeling that Jerome is going to lower the interest rate soon. Well, if Jerome lowers the interest rate soon, we could be expecting a cherry on top for the market space. Congrats. Let's go, Johnny. Evergreen shipping situation as well. Yes, that was a bit odd, I'll be fairly honest. Greetings, Miles and CMF. The Ray, good to see you as well. How you doing, bro? How you been, Ray? Get some XLM. XLM is a great crypto project as well. I'm guessing Ian is trying to tell Custom to go for XLM as well. XLM, incredible asset, no doubt about it. So is XDC. Now, Bitcoin ETFs. I explained to everyone last week that institutions essentially are looking for alternative options. And it does show that when you have Wall Street prepared to help blockchain companies go public, and even Morgan Stanley lining up blockchain companies to help them go public, and even Bank of America's executives lining up crypto companies to see which one they can make go public so they can make some money out of blockchain. So it does show that, essentially institutions are definitely looking for alternatives to the crypto space when it comes to it, and not just Bitcoin ETFs and Ethereum ETFs. It seems like they're bored of just Bitcoin and Ethereum ETFs. I'll be very honest. Last week, I shared essentially an analysis perspective from Nicholas, who is a JP Morgan analyst, where he came out and said that institutions are looking for alternatives. They're tired of Bitcoin only and Ethereum only ETFs. They're just tired of it. They want better options. And then you fast forward from last week to this week, essentially, where institutions are getting ready to help other blockchain companies go public. So they start to shift away. So now, why am I saying that? Well, because of this. Bitcoin ETF trends signal shifts in investor behavior. Bitcoin ETFs listed in the United States recorded their second largest capital withdrawals this year, amounting to $516.4 million. According to Farsight data, the essentially last 10 days witnessed the ninth net outflow day, reflecting essentially investors' cautions and approach towards Bitcoin, which has been fluctuating within essentially a narrow price range. Now, last Tuesday, essentially, Bitcoin fell below 90,000 after essentially exiting a 3-month channel, dropping to around $86,050. Now, this decline illustrates the concerns investors have regarding Bitcoin's prolonged trading within a confined range. Now, according essentially to Velo's data, Bitcoin's CME analyzed basics value has decreased by 4%, marking essentially the lowest level since the ETFs began trading in January 2024. Under essentially cautious strategies, investors are taking long positions in the spot market while applying short positions in futures to seek returns from price essentially differentials. Now, indicating that this narrowing of returns might be one of the underlying reasons for the recent declines. So it seems like some investors essentially are putting bets on both sides. They're putting long positions down, but also on the other side, they're putting squeeze positions down. Market analysts suggest that this risk-adjusted strategy may prompt investors to close their positions as returns fall below the 5% yield of the US 10-year Treasury bonds. According to Arthur Hayes, for example, the co-founder of BitMEX, many IBIT holders are positioning themselves to achieve higher returns between essentially ETFs and the CME futures. Now, investors are essentially re-evaluating their positions based on current risk-reward balance, and the capital outflows from ETFs could lead to changes in streak applications as market volatility encourages cautious behavior and among investors. These developments indicate that the market's volatility nature can significantly influence investor decisions, and the current essential strategy and narrowing price differentials may serve as a critical indicators for upcoming movements, underscoring the necessities for investors to carefully monitor their risk and reward factors and update their strategies accordingly. So it does seem like institutions want alternatives. They're tired of only Bitcoin and ETFs, Bitcoin ETFs and Ethereum ETFs, and they're looking for alternatives. Some investors said to pull out some of their money. Now, on the topic of investors looking for alternatives, it's not been a great day for MicroStrategy, or strategy, shall we say, because you see, as everyone looked into their portfolios these past days, if you looked into your portfolio these past days, you might have been down essentially 10% or 15% or 11%, depending on what assets you are holding. MicroStrategy has had a tremendous downtrend. So strategy stocks are down 16%, aimed Bitcoin's route. Now, shares of MicroStrategy, formerly MicroStrategy, are down approximately 16% in a year-to-date aimed Bitcoin's ongoing essentially correction. One particular company is definitely taking a blow, and it is Strategy, Michael Saylor's company, because their entire company's motto is essentially phrased upon Bitcoin succeeding, or a Bitcoin essentially reserve happening, which, by the way, 4 American states rejected the idea of an only Bitcoin reserve. But they never said, they're rejecting a crypto reserve, just an only Bitcoin reserve, which didn't really end well for MicroStrategy. Now, the stock's abrupt sell-off foregrounds long-standing questions about the sustainability of its Bitcoin buying spree. On February, for example, BTC dropped around 4% to around $88,000. And the company's strategy is largely essentially contingent on the essentially ability to raise additional capital backed by its growing Bitcoin treasury. Now, the letter a market analysis firm said essentially was this: in a significant where their liabilities rise significantly higher than their assets, this ability essentially could deteriorate, they said. However, stocks analysts remain bullish on MSTO's prospects for a rebound. Now, I do think obviously there's going to be a rebound happening without a doubt. But what's interesting is what MicroStrategy has said moving forward. So analysts at essentially Benchmark, a stock researcher, has raised MSTO's price targets to $650, citing confidence that strategy will continue to aggressively raise capital to fuel its Bitcoin acquisition strategy during the balance of the year, according to a research note shared by Cointelegraph. So it seems like MicroStrategy is not going to be slowing down in any sort of a way. And essentially, since 2020, strategy has spent upwards of $33 billion buying Bitcoin at an average cost of around $66,000 per coin, earning an unrealized profit of more than $10 billion, according to data from MSTO Tracker. Now, it financed the buys with a blend of stocks issuance and around $9.5 billion in convertible debt. Virtually none of strategy's debt matures until 2027 or later, which means that's when they have to pay up around 2027, as I revealed before. Now, this significantly reduces the risk of short-term lived Bitcoin price downtrends, forcing strategy to maybe liquidate their Bitcoin holdings. For this to happen, Bitcoin would need to fall essentially well over 50% from the current levels and remain essentially there until 2027 and beyond, they said. So for MicroStrategy to go bankrupt, Bitcoin needs to drop 50% and stay there until 2027. Chances of that happening is quite slim. However, Bitcoin essentially falling to 90,000 on February 25th marks the first time since November 2024 in the ongoing sell-offs in the US spot Bitcoin ETF space. Now, the same day, shares of MicroStrategy fell more than approximately 10%, to recording essentially $245, according to data from Google Finance. The stock is down nearly 50% from all-time highs of $473 in November, and shortly after, strategy unveiled its ambitious goal of buying $42 billion worth of a Bitcoin by 2027. Other companies following similar essentially Bitcoin treasury strategies saw comparable essentially retraces, and Similar Scientific also, which stated buying Bitcoin 2024 is down more than 20% year on year to date. And Google Finance data also showed, however, Benchmark believes in strategy's ability to keep generating Bitcoin yield no matter what. Now, the biggest question for a lot of people's mind is when it comes to Bitcoin, their biggest holder is MicroStrategy. Is there an actual chance of MicroStrategy collapsing in any sort of a way? Because if MicroStrategy goes downhill in any sort of a way, excluding that one point that Bitcoin has to save 50%, because there are other factors in play that MicroStrategy can go bankrupt. And here are the factors basically on this, because at the back of people's minds, there must be a question of, if MicroStrategy goes bankrupt, what happens to the market space? What's the impact? What's the repercussions? And the question of, can it go bankrupt? What's the conditions of it going bankrupt in any sort of a way? It's just something that people should be aware of when it comes to MicroStrategy. So the chances of it, essentially. Could MicroStrategy be liquidated if Bitcoin falls further? Which levels in BTC is critical for liquidation? As MicroStrategy, MSTR has experienced a significant drop of over 55%, speculation has increased regarding the possibility of a forced liquidation on MicroStrategy's side. With the company owning approximately 499,096 Bitcoins, worth over $43.7 billion. Many are questioning whether further declines in the price of Bitcoin could force MicroStrategy to sell its holdings. MicroStrategy has been accumulating Bitcoin for years, with an average purchase cost of around $66,350 per BTC. This isn't the first time concerns about liquidation have essentially surfaced regarding MicroStrategy. Similar discussions arose during the essentially 2022 bear market situation we were having, when Bitcoin fell from around 70,000 to around 15,000. But the only reason Bitcoin fell from 70,000 to 15,000 back then is because we didn't have Bitcoin ETFs. The Bitcoin ETFs have given some sort of strength, essentially, to Bitcoin to stay at relatively high prices. Now, the foundation of MicroStrategy's Bitcoin strategy is ability to raise capital in a scenario where liabilities significantly exceed assets. This ability can be compromised, but that doesn't necessarily mean forced liquidation, because some people are going around and saying that, essentially MicroStrategy might need to do some sort of forced liquidation. MicroStrategy's approach includes borrowing through 0% convertible notes, using capital to buy Bitcoin and increase exposure, selling shares at premium to essentially raise additional capital, and repeating this cycle to end assets even further. MicroStrategy currently has approximately $8.2 billion in total debt, backed by $43.4 billion worth of Bitcoin, reflecting a leverage ratio of approximately 19%. Importantly, most of this debt is in the form of convertible notes with conversion essential prices below the current share price and do not mature until 2027 to 2028. A forced liquidation will likely require a fundamental change within the company. Under the existing credit agreements, earlier repayments of convertible notes can be triggered under certain conditions. However, for this to happen, typically one of the following conditions will need to be met first. So, these are the conditions of, is MicroStrategy going to be ever forced somewhere down the road to liquidate their Bitcoin? So if you ever wanted to know regarding MicroStrategy, because they are the biggest Bitcoin holder as a company, essentially, excluding BlackRock and all the ETF market space, but this is just a company holding Bitcoin for themselves. There's a big difference to BlackRock's ETFs. So if you ever wanted to know, well, here it is. There are two factors in play of MicroStrategy ever being essentially, forced to liquidate their Bitcoin holdings. So the first one is if shareholders vote to dissolve the company. If the shareholders of MicroStrategy vote to dissolve the company, then there would have to be essentially forced liquidation regarding their Bitcoin assets. The only reason that shareholders ever might vote against MicroStrategy to dissolve the company could be that if they ever wanted to completely jump out. Chances of that happening, slim. The second one is corporate bankruptcy. That can only happen if MicroStrategy falls behind on the debt and it grows even bigger, or essentially we see a much more drastic drop inside the market space even for a short period of time, which again, slim chance. Now, MicroStrategy's co-founder and chairman, Michael Saylor, holds 46.8% of the voting power. If you didn't know, now you know. Michael Saylor holds about 46.8% of the voting power when it comes to MicroStrategy, making a shareholder-initiated liquidation unlikely because he does have some sort of, not majority power, because it is only 46.8%, so they can overrule him, but he does have quite a lot of positions at that company. And for a serious liquidity problem to occur, Bitcoin would need to experience a sustained price decline of over 50% from current levels. Saylor has essentially repeatedly dismissed the idea of forced liquidation. Even Michael Saylor has been asked the question, where they asked Michael Saylor, would you ever be forced liquidated when it comes to Bitcoin through MicroStrategy's company? And his answer has always been no. Saylor has repeatedly dismissed the idea of forced liquidations, even claiming that if the company would, it will buy all of the Bitcoin. So it seems like MicroStrategy or Michael Saylor is not going to be slowing down in any sort of way on purchasing Bitcoin. Because in his words, he said he will buy all of the Bitcoin if he could. If Bitcoin fell to $1, he'd buy everything back up again. So let's say Bitcoin right now, hypothetical, it's never going to happen. Never going to happen. But let's just say right now, Bitcoin is sitting essentially at, 90,000 or so, 80,000. Bitcoin goes to $1. Never going to happen. But Bitcoin goes to $1. No, never going to, but very slim chance. Bitcoin goes to $1. MicroStrategy said even if they lose from $80,000 Bitcoins to essentially goes down to $1, he's still buying it at $1. These are indications of essentially that when people say Bitcoin can go to $76,000, well, I'll be honest with you. When you have companies like Michael Saylor, when you have companies like MicroStrategy or Strategy or people like Michael Saylor who are willing to lose $43 billion overnight and again re-enter into the same assets, yeah, the chances of seeing $76,000 Bitcoins, only essentially $50,000 Bitcoins, is never going to happen with people like this in power. I'll be honest, with CEOs like this, the chances of ever seeing like $50,000 Bitcoins or $40,000 Bitcoins is never going to happen. This man is willing to lose $43 billion overnight and buy the same asset that lost it $43 billion again. And for essentially a sustained decline in both Bitcoin and MSTR price stocks could hinder MicroStrategy's ability to raise capital, which is crucial to its long-term strategy. Investors are witnessing the first bearish, essentially, market space for MicroStrategy since its Bitcoin-focused strategy began traction back in 2024. The question is, will investors continue to buy the dip? And it seems to be yes, which it should be. As I said, we're not in essentially any sort of bear hibernation market space. We're just in a very highly manipulated market space. And as I explained yesterday, certain assets haven't reached their price points yet in any sort of a way. For example, XRP hasn't reached its price point it needs to be sitting at because it's been held back by its case for the longest time. XLM is still incredibly cheap, so is XDC, so is HBOR, so is Cardano. These assets are incredibly cheap for what they're going to become later on. And these assets are not short-term assets in any sort of way, they're long-term assets. So I've never understood the fact when people buy XRP, for example, or buy XLM or buy HBOR, and then the price goes down by like 10 cents or 5 cents, they start panicking and going, I can't believe this has happened, or so on and so on. But it's a long-term project. So what does it matter if you buy it 10%, essentially 10 cents higher, or 5 cents higher, and it goes down 5 cents? It doesn't really matter, because you're not going to be jumping out at $3 on you. You're holding on XRP, for example, to jump out higher prices. So again, it's just noise. Don't be distracted by the noise that's happening around you. Just think about the whole institutional aspect, where they're entering the market space, and this is just coincidentally when the market space decides to get hacked on the Bybit situation. But the question of essentially buy the dip, what Michael Saylor has said is essentially a clear stance. He said in his own words, Bitcoin is on sale. Time will tell whether the market agrees. Look, what I would say is Michael Saylor is correct. He's an incredibly intelligent man. I've said this before. He's an incredibly intelligent man. But there's two things he said. One I agree with, the second one I don't agree with in any sort of way. Buy the dip, yes, no financial advice in any sort of way. But if you ever wanted to buy certain assets and they're a bit overpriced, well, here's your perfect chance. And the market isn't going away. We're not going into some sort of hibernation bear market in any sort of a way. And these are not drastic drops. If you've ever been inside a crypto space, you would know about drastic drops. Drastic drops will be when Bitcoin goes from 70,000 to 5,000. That would be a drastic drop. Is that ever going to happen? No. And then some people will argue the point of Bitcoin's in a bull market, the altcoins are essentially in a bear market. Not really. Because again, we're not getting drastic drops in the altcoin section. Some coins are taking a massive blow, and some assets inside the altcoin space aren't taking a massive blow in any sort of a way. I'll be honest, Ethereum took a massive blow, but that's only because they were hacked. Solana is taking a massive blow, but that's only because there's about 2 billion tokens that's going to be released from them. Doge might have taken a big blow as well. That's only because there's rumors of high selling that's going to be happening within Doge ecosystem. But when it comes to other assets like XRP or XLM or XDC, look at where XRP was. We're sitting at 50 cents for the longest time. Now, is it sitting anywhere near 50 cents? No. Is XRP essentially in an altcoin bear market hibernation? No. Far off. So certain assets are very, very overpriced. I said this a long time ago, and I'll say it again. And regarding the other assets, they haven't moved. They're still incredibly cheap for what they are. So we're, the argument of some people might be arguing, oh, now people are saying essentially that Bitcoin is in a bear market, and it's the altcoins that are in a bear, essentially. Some people are arguing now that Bitcoin is in a bull market and that altcoins are in a bear market. But the argument before was the market's about to go into a bear market. And I said, no, it isn't. So now the statement has been changed by influencers, and now influencers are saying, no, that's not what we meant. We meant Bitcoin is in a bull market, and essentially the bear market is for the altcoins. But that's still incorrect, because we're not in a bear market for altcoins. Some coins might be, drastically impacted, but that's only because of their certain conditions. Solana is getting 2 billion token releases. Of course, it's going to go belly side up. And then you obviously have essentially a Bybit situation hacked for Ethereum. Of course, Ethereum is going to go belly side up. That's just a given. So, but there are certain other assets inside the altcoin that they're not in a bear market. It's just manipulated. But it's interesting how the influencers that are screaming and shouting from the top of their lungs, we're in a bear market for the longest time. And I was saying, no, we're not. And we're just in a very manipulated market space. Now those same influencers, and I said, the reason why is because Bitcoin is sitting so high. I said Bitcoin is sitting essentially around 90,000 or 80,000. How could we be in a bear market in any sort of a way? A bear market is when Bitcoin drops from that price point to around 20,000. They can say, yes, we're in a bear market. But now the argument has changed, and people are coming out, these influencers are coming out, and they're saying that, no, we're not in a bear market for Bitcoin, but we're in a bear market for the altcoins. Again, no, we're not. Certain assets are being affected because of what's happening around them with their token releases or essentially of the hacking situation. But nevertheless, so I agree with him, buy the dip, no financial advice in any sort of way. But the other part where Michael Saylor said Bitcoin is on sale, it's true-ish, but I still wouldn't touch Bitcoin with a 10-foot pole. I'm sorry to say, for any Bitcoin maxis out there, I wouldn't recommend Bitcoin to my worst enemy because it's so overpriced, it's ridiculous. And I'm not saying Bitcoin is never going to go higher than $100,000. It probably will somewhere down the line. The more essentially ETF situations that will be happening for Bitcoin. Let's just see, or not ETF, sorry, Bitcoin reserves that happen. It could push Bitcoin to higher price points. But I wouldn't tell anyone to buy Bitcoin. It's overpriced. There's no point touching it. There's no point touching Ethereum either, because Ethereum is overpriced as well. And Solana's, let's just be honest, the only reason Solana exists is because of meme coins. Meme coins go away. What's Solana's use case? Honestly, Solana has no use case except meme coins. That's it. If meme coins go away, Solana's utility is what exactly? There are projects that are built upon Solana. They could do well for themselves, but let's just be honest with ourselves. No chance. But the whole narrative about crypto influencers was funny. First, crypto influencers were saying, we're in a bear market, we're in a bear market. And I said, no, we're not, because Bitcoin is still too high. And then they said, no, Bitcoin is in a bull market. The bear market is for the altcoins. Change of tone there. But again, no, it isn't. Just a Bybit hacking situation and a tariff situation and some token release situations all happening at the same time. That's what it is. But yeah, I agree with Michael Saylor. Going for the dip, why not? Going for Bitcoin, hell no. Don't touch Bitcoin. It's too oversaturated, it's too overpriced. For the retail section, it makes 0 sense to buy Bitcoin. If you're somebody inside the retail section, it makes 0 sense to buy Bitcoin. It makes 0 sense to buy Ethereum. I'll take it one more step further. It makes 0 sense to buy Solana. Especially now with their 2 billion token release. Now, on the positive note of the crypto space, as I've been keep on saying, we're not in some hibernation bear market situation. We're just in a very highly manipulated market space due to not having rules and regulations. And that all goes back and stems from Gary Gensler. Once again, news like this is essentially being overshadowed. For example, the Nasdaq has just filed in today a 19B4 filing to list and trade Grayscale Polkadot ETF. So in a situation like this, where some people think the market's about to go completely downwards, we have the Nasdaq applying for more ETFs. The only reason the Nasdaq would apply for more ETFs for altcoins, even though some people might presume we're going into an altcoin bear market or we're in one already, makes no sense. Why would the Nasdaq apply for more ETFs for altcoins? The only reason the Nasdaq would apply for ETF altcoins is because there's interest towards them from clients to buy them. Now, the Nasdaq has applied essentially for an XRP ETF as well, an HBAR ETF, and now Polkadot ETF, and a few other ones. But it wouldn't make any sense if we're in any sort of a bear market, essentially altcoin season. Would it now? Could it be because they're applying for all of this because the next clientele is institutional clientele? Nasdaq has filed essentially a 19B4 filing application to the US essentially financials watchdog. The stock exchange is seeking regulatory approval to list and trade a new investment fund from Grayscale tied to Polkadot called Polkadot essentially ETF. The proposed fund will track the spot price of Polkadot's native crypto asset DOT and will trade essentially under the ticker symbol DOT. Now, Grayscale Investments has funded the proposed fund and aims to create a more regulated environment for crypto investors to expose their portfolios to the Polkadot ecosystem. Now, besides the spot Polkadot exchange-traded fund, Grayscale is seeking regulatory green lights to offer exchange-traded funds tied to other crypto assets, such as, for example, XRP, Solana, Cardano, Doge, LTC. These are all the recent ETF applications from the Nasdaq as well, from Grayscale's perspective. And again, if we're in some sort of a hibernation bear market situation for altcoins, there wouldn't be this many altcoin ETF applications. There wouldn't be another one today. If there is, it's because clients are waiting, high-profile clients are waiting to enter the market space. So those indications of a hibernation bear market we're going to be going towards in altcoins, or we're already in one. So why is the Nasdaq applying for more altcoin ETFs? Why is a billion-dollar industry applying for more altcoin ETFs? Are they morons? Does the retail section know better than the Nasdaq? Does the retail section know better than Grayscale? What's with the timing? If we're about to go into a ridiculous bear market, why essentially be applying for essentially more ETFs? Total Capital, what I'm trying to say to you is it's all distractions. We're not in a hibernation bear market space. We're not in essentially, we're just in a very manipulated space at the exact same time the institutions about to be entering the crypto space. Total Capital, for example, management previously suggested a leveraged 2x Polkadot ETF as a part of a broader filing for 10 leveraged crypto funds. However, the firm withdrew its proposal shortly after the initial filing for all of its 2x leverage ETFs, so they applied for something else. Now, DOT currently ranks as the 21st largest crypto asset by market capitalization on CoinMarketCap. And according to data from the crypto essentially data algorithm, the digital asset market capitalization now stands at $6.8 billion of essentially this time of publication. DOT is exchanging hands for around $4.43, and the crypto asset is down 6.29%, bringing its 7 days loss to around 7.13% loss. Now, the news comes after the US Securities Exchange Commission acknowledged Grayscale's Cardano ETF filing straight away as well. The regulator has 180 days to review the application that is set to conclude by August 2025. The filing essentially aims to list trust shares under the ticker symbol GADA. Now, the trust aims to mirror essentially the value of others' token holdings through CoinDesk Cardano Price Index ADX as a price determinator without any fees and expenses. The acknowledgement marks the first step in the SEC's approval essentially process according to the 19B4 form published essentially. And the next stage is the public comments. The filings will be posted on the Federal Register, and afterwards, the public has 21 days to submit their responses. Following this period, the SEC will decide whether to approve, reject, or extend its reviews by opening more proceedings. The new developments extend their essential impacts, and past Grayscale, Bitwise Invest, 21 Shares, Canary Funds, and Wisdom Tree Funds have also filed for XRP ETFs as well. The Regulating Commission has also acknowledged Dogecoin's ETF filings, and the acknowledgement would have been unthinkable under Gary Gensler's leadership. Historically, altcoin ETF applications have either been rejected or withdrawn by essentially the previous administration. Now, in the meantime, Trump's administration has essentially promised a very more crypto-friendly environment to foster growth and expansion of crypto assets, and they definitely have, and they're definitely delivering regarding the SEC. And soon after assuming office, Trump appointed the pro-crypto candidates for Mark essentially to be acting chairman, Hester Peirce to be second in charge, and Paul Atkins to be going to voting to see when he comes into power. But nevertheless, we're not in some sort of essentially bear market for altcoins and a bull market for Bitcoin, because now the narrative has been changed. The narrative was before we're in a bear market for everything, but now it's we're not in a bear market for Bitcoin, but we're in a bear market for altcoins. No, it isn't in any sort of a way. If you're saying this is a bear market, you've never experienced a bear market in your entire lifetime, to be fairly honest. XRP, if you just look at certain assets, it doesn't add up. A bear market scenario didn't add up for Bitcoin because it's too high priced, and then they changed the narrative to Bitcoin's not in a bear market, Bitcoin's in a bull market, it's the altcoins into a bear market now. That doesn't add up either, because certain altcoins are still very far off from where they were sitting at for the longest time in a bear market. So that still doesn't add up either. So what it is actually is the timing of it. Institutions getting ready to enter the market space. ETF applications are happening at the same time, altcoin ETF applications, and the exact same time the SEC is dropping cases one by one. Those are all positive indications of where the market space is about to be going towards. But yet again, all that is just being overshadowed completely by absolute nonsense and noise inside the crypto space. By people, not everyone, but by some people, but also by some ridiculous news that's going around. Don't get distracted. Institutions are getting stronger. Institutions are getting, day by day more ready to enter the crypto space. And the NASDAQ wouldn't be filing for altcoin ETFs if we're about to, go into a massive crash for altcoins. Why would the NASDAQ be filing for more ETFs? They're not morons. It's $1 billion place. Why would institutions be applying for more ETFs? They're not morons either. Neither is Grayscale. There's a reason why they're doing it. The timing is all that matters. Now, let's go in and out for a second. And again, by in and out, you'll know what I mean right now. Trump and China, which also has impacts on the market space. China is pretty much the second biggest market space in the world, the United States being the first one. China to outline the 2025 economic targets aimed uncertainty over the Trumpian war trade. So China and Trump are obviously, they're going to have impacts on the market space. China being the second biggest market space in the world, and Trump being the first essentially biggest market space in the world, the president of the biggest essentially market space in the world. So here it is. This is definitely going to have some such waves inside the market space, some ripple effects inside the market space. China is set to review its economic targets for 2025. Following the rising economic uncertainty, supposedly caused by the trade war threats from US President Donald Trump. The annual meeting of the National People's Congress, the NPC, for China will begin on March 5th in Beijing, where essentially Premier Li Qiang will deliver the government's work report. China is going to be coming out with a massive work report on what China's next footsteps are going to be on this whole trade war situation on March 5th. And according to a Bloomberg update, essentially closely watched documents will list the Asian countries' economic goals, including targets for GDP growth and inflation, employment, and essentially physical deficit. Economists expect the Chinese government to focus on strengthening essentially domestic demands, expanding social support measures, and ensuring stability inside the labor markets. Yet Beijing's economic roadmap may soon be overshadowed by the wave of US trade sanctions, with multiple investigations into China's trade practices set to essentially to the Trump's desk on April 1st. So, while China is getting ready to release their massive report on March 5th, that's definitely going to have repercussions inside the market space, good or bad. We'll see when March 5th comes around. Just keep that in your calendars. March 5th, China's reports. At the same time, the US is obviously getting ready. Trump is getting ready to impose more strict regulations on China. But also at the exact same time, April 1st is when Trump is going to get his newest reports on what he's going to be doing in China's market space. China's inflation data, which came out before the NPC meeting, shows that the consumer price index rose from 0.1% in December to 0.5% in January 2025. And this was higher than 0.4% of the market as expected. The food prices, for example, which had been in decline at the end of 2024, rebounded in January, with pork prices raising 13.8% year over year and fresh vegetables seeking essentially 2.4% increase. Why is that? Any sort of relevance to you holding crypto inside the crypto market space? Well, China has repercussions. If they go bad, the market has repercussions of going bad too with it. Increases in healthcare, education, and housing costs cause non-food commodities to rise as well. But yet again, if we do have rules and regulations inside the market space, then less crypto projects will be affected by China's waves of repercussions, or any other country going side up or essentially sideways or belly up in any sort of a way. If we have rules and regulations and adoptions in place, then less crypto assets will be affected. But we don't, so we get affected. And China's economic policymakers are expected to set a GDP growth target of around 5%. Through some analysts anticipate a range of 4 to 5%. Inflation targets are likely to also be revised, with economists from the Citigroup predicted that the consumer price index CPI goal will be lowered from 3% to 2%. And fiscal policies is also forecasted to take a more expansionary approach, with HSBC economists forecasting a broader-based fiscal deficit of 9.1% of GDP, an increase that exceeds essentially more aggressive stimulus plans. Now, in the labor markets, the government is expected to set a goal of at least 12 million new urban jobs, aligning with the number of colleges graduates entering the workforce this year for Chinese market spaces. Spending priorities will likely be focused on domestic essential consumption and industrial upgrades as well. You see how Trump is doing America first. Trump is doing America first. China has decided to take a page out of Trump's rule book and do China first as well, where China is going to focus more on their domestic market space moving forward than their international market space. Something that essentially something that China is doing, and something that the US is doing. The US right now is heavily focused on America first, which means American factories. There needs to be more American factories building cars, building everything essentially that America relies on countries like China to develop for them. Trump is trying to do it inside the United States, which is essentially America first. China is also now trying to slowly do more, focusing on the domestic side of the market space than the international side. Because if they do get sanctioned, China will collapse completely. China's economy essentially is very bad, and so is their real estate market space. And if any more pressure is set upon them for the longest time, China's economy will collapse, because a sanction would mean that China, who is the #1 producer pretty much in the world for pretty much, you can say, everything, won't be able to sell their items, because China's essentially a country. China relies so much on international essentially sales than they do on domestic ones. And if China gets sanctioned, it means that China cannot sell to the US, they can't sell to Canada, they can't sell to Latin America, they can't sell to Europe, they can't sell to essentially the UK, they can't sell to Australia, they can't sell to Japan, Singapore, the Middle East, or no one. No one's allowed to buy from China if China ever gets sanctioned, which means China's economy will just pretty much collapse very soon, because they can't sell and they're producing too much, which puts a lot of pressure on the country that's already crippling from the real estate sector in China. So China has decided to focus on their domestic side, focus more on producing and selling within China than internationally. So if they ever do get sanctioned, they can survive it for a longer period of time. Beijing could also consider essentially providing capital injections for banks to facilitate debt essentially reconstructing for local government financing vehicles and offering subsidies to families with young children. In turn, pensions for retirees may also see an increase. Sources familiar with the matter, cited by Bloomberg, these economic targets and policies have been formulated behind closed doors over several months and are largely essentially insulated by external pressures being the US. They will be tested by the potential escalation of US trade tensions in the weeks following the NPC meeting, as in Trump is going to put his foot down on China. And China's policymakers are indeed seeking to stabilize economic growth, but they must also essentially contend with the threat essentially of the President Trump sanctions. Now, China was warned essentially that they're not allowed to essentially do any sort of trades with Russia while they were under sanctions, but Chinese banks did do trades with Russia while Russia was sanctioned, which wasn't great in any sort of a way. And that some Chinese banks decided to stop working with Russia and doing trades because they didn't want to get sanctioned by the US as a Chinese bank. And even though Russia and China were in BRICS at the time, which they still are, even though Russia wants to exit, even though they were essentially in BRICS at the time, they still feared the US. China still feared the US even when they were essentially beginning early days of BRICS, because what happens if, China gets sanctioned? Their economy cripples and BRICS pretty much goes away with China. Now, the US government wants to introduce tougher, essentially, semiconductors and export controls and efforts to push key US allies, and such as Japan and the Netherlands, to tighten restrictions on China's access to advanced chip-making technology. Why is the US so focused on China's chip-making situation? Well, if China gets too advanced, it's not great for the world, to be fairly honest. Now, obviously, some people might say, why, China getting bigger and stronger is not good for us, and that some people really want to see the downfall of the US. In today's society, people that live in the West really want to see, essentially the US's downfall, which is the most dumbest and moronic, ideology you should have in your brain. Praying and hoping for the US's downfall is the dumbest thing to ever pray for, the dumbest thing to ever hope for. If the US does go sideways and belly up, it will take down the entire market space of the world with it. Genuinely. So if you are somebody that's essentially in a different country around the world and you're hoping for the US to, you're hoping for the US's downfall, you're hoping for the US dollar's downfall, which a lot of people are inside the crypto space, which is a bit weird. It's like they don't understand how essentially the economic side works, or essentially the political side works. So if you're somebody essentially, for example, in the UK or in the EU or in Australia or in Japan or in Singapore or in the Middle East or in Latin American countries or even in America or Canada, and you're hoping for the US's downfall, it's the dumbest thing to be hoping for. Because if they go sideways, the world goes sideways with it, which means whatever country you live in, you will be impacted a lot more than the US will, because your countries are heavily reliant on the US's market space. It goes by what the International Monetary Fund said. If the US market sneezes, the world catches a cold. A quote by the International Monetary Fund, which is facts. So now on the topic of essentially chip making advanced semiconductor situations, the US obviously doesn't want China to be in control of #1 AI producer or #1 data producer or #1 tech producer in any sort of a way, because then that means that China will have a much more bigger market share for the world, which means that China will have a much more louder say. That's not great for the US or the world. China needs to always remain number 2 for a reason. Some people might disagree with that. Some people might agree with that. The bigger thing is, honestly, if China becomes number 1, we're all doomed, okay? Because if you think right now you don't have freedom of speech or human rights or any sort of way, any country you might live in around the world, people in China are a lot more restricted. And some people might say, no, people in China are not restricted. People in China could do whatever they want. The media is lying to people. No. In China, essentially, China was the first country to introduce pretty much CBDCs. Just a heads up. China was the first country in the world to introduce CBDC, central bank digital currencies. China was the first country in the world to introduce social credit systems to rate people if they're good or bad on what they buy or what they say. China was pretty much the first ones to do censorships. People can't use Google in China unless they VPN it, or YouTube unless they VPN it. So yes, the media does lie to you, but some things are true. I'll be very honest with you regarding China. So you don't want that country in first place in any sort of a way. So that's why the US is always putting pressure on China to stop getting their hands on semiconductors and become some sort of a powerhouse for AI or blockchain or essentially technology in general, because they don't want to give China a bigger market share to have a louder voice inside the market space. So that's why they're trying to always push China down. If you ever wondered yourself, why does the US keep on push China down? That's why. Because if they don't, China would try to take number 1 place. Now, and regarding semiconductors as well, one more thing. It turns out, for example, China and Russia were using semiconductors that the West was sending them, like fridges, for example, washing machines and dishwashing machines and so on. And Russia was using the semiconductors from washing machines for weaponry. And the same goes essentially for China as well, but very odd. Now, recent meetings between Trump officials and their Japanese and Dutch, essentially counterparts, have explored ways to restrict the holdings and the engineers, essentially, from China getting their hands more on semiconductors. The discussion suggests Washington is headstrong on restricting, essentially, Beijing's ability to develop its chip industry, efforts that began under the Biden administration. Now, US officials could also consider adding new sanctions on several types of Nevada chips, and that essentially be exported to China without a license. There are also early stage talks about imposing stricter limits on the number of AI chips that can be shipped globally without the American government's approval. Look, America only wants to control China. They don't want to dump on China. They don't want to, essentially make China go belly side up, unless China really wants to aim for that, which they must be very stupid to aim for that. But this whole Trump and China back and forward situation obviously causes repercussions. This is where the crypto side comes in. China going back and forward with Trump does cause repercussions inside the market space, but it's only temporary repercussions. It's not going to be in any sort of a way essentially prolonged, creating bear market situations in any sort of a way. It's just going to be a few days the market reacts to China's situation and the market goes back up again. In a few days, China market reacts, the crypto markets react to Trump's essentially tariff situation, and the market goes back up again. What I'm trying to say is we're stuck in some sort of a cycle inside the market space where the market will be good for about 3-4 days, and then something will impact it and will go down for 3-4 days, and then something will impact in a positive note, and then we go back up for 3-4 days. And that's just what's been happening for a while. We go 3 to 4 days down, 3 to 4 days up, 3 to 4 days down, 3 to 4 days up. We've been going like this for a little bit of a while now. And again, it all goes back to the roots of we don't have regulations in place. So just a heads up, if you're a bit worried the situation on the market space and you're thinking, we might be going towards a bear market, not by a mile. Not the way the institutions are lining up one by one to enter the market space. And even Wall Street, who doesn't want to touch the crypto space with a 10-foot pole, wants to help blockchain companies go public. Wall Street doesn't do things randomly. And Wall Street is the king. Everybody in Wall Street, the majority in Wall Street, are the king of manipulation, greed, power, and money. So if Wall Street is aiming to help blockchain companies that they didn't want to touch with a 10-foot pole, there's a reason why they want to touch. There's a reason why they want to go towards blockchain companies now at this particular time when people are distracted by Bybit situation or other macroeconomic effects. There's a reason why Wall Street is getting ready to essentially approach crypto companies now at this particular time, moment in time. But this whole China and Trump situation back and forward is obviously going to cause repercussions 3 to 4 days every time it happens. Just a heads up to people, so you don't get surprised. and the news comes out suddenly within a few days. Trump imposes more tariffs on China, and the market, and the crypto market goes down. Don't be surprised. It's not going to last too long. 3 to 4 days, we'll be back up again. Or the news comes out and goes, China is imposing more tariffs on the US. The market will react essentially to 3 to 4 days for that as well, and then it'll go back up again. So what I'm trying to say is I'm preparing you for the ups and downs that's going to be heading your way. It only lasts 3 to 4 days, every up and down. Now, urgent warning from the European Central Bank. And it seems like the European Central Bank's advisor is very, very heavily stuck on the idea that they only love CBDCs and stablecoins, and that's pretty much it. But they have established rules and regulations for the crypto space. And what I mean by that is the European Central Bank's advisor has went against Bitcoin again. They're calling it a speculative asset. And I don't disagree with them, because even though, as I said, Bitcoin maxis give the title Bitcoin is digital gold to Bitcoin, it isn't. And I've proved that many times. And just recently, gold was up. Bitcoin, which is the digital gold, is down. It's moving the opposite to what it's given a title of. And so I don't blame them in any sort of way, but also shows that where the focus is going towards. So here it is. Urgent warning, the European Central Bank advisor brands Bitcoin's reserves as a risky speculative asset. Jürgen, an influential advisor at the European Central Bank, has essentially delivered a scathing critique of Bitcoin, dismissing the notion of Bitcoin reserves as a viable strategy for central banks. His comments, reported by Cointelegraph, paint a picture of Bitcoin as a dangerously volatile and fundamentally flawed asset, especially in the context of the current market turbulence where Bitcoin has dipped below $88,000, triggering a massive crypto liquidation worth over $1.5 billion in just 24 hours. And Jürgen also argument against Bitcoin reserves isn't essentially casual dismissal. It's a structured critique based on what it perceives as Bitcoin's inherent weaknesses. He argues essentially that unlike traditional reserve assets like oil or raw materials that underpin essentially economic activity, Bitcoin lacks fundamental economic necessities. Let's break it down. Here's his key points from the European Central Bank. Volatility concerns. The most prominent reason for Jürgen's skepticism is Bitcoin's notorious price volatility. He emphasizes that holding such a volatile asset as a part of a national or central bank reserve would introduce unacceptable, essentially, instability, and recent market events with Bitcoin plummeting and causing widespread, essentially, crypto liquidations only reinforces this concern that the European Central Bank is having. And lack of economic necessities. Jürgen's questioned Bitcoin's fundamental utility in the real economy. And he contends that Bitcoin doesn't serve a crucial economic purpose in the same way that essential commodities do. And this lack of inherent economic backing, in his views, makes it unsustainable for reserve status. And manipulations, essentially, sectors as well. The European Central Bank advisor also points to Bitcoin's vulnerability to market manipulation. The relatively nuanced, essentially, and still somewhat unregulated nature of the crypto, essentially, market makes it prone to price swings influenced by large players or coordinated actions. And the scalability further undermines its credibility as a stable reserve asset. Fuel speculation. Jürgen believes that incorporating Bitcoin into reserves will not stabilize economies, but rather essentially much more manipulated speculative activities will happen. He fears that it will legitimize and encourage further risky investments in asset classes he considers inherently risky. In essence, Jürgen's viewpoint is rooted in a traditional economic perspective that prioritizes stability, instructive values, and tangible economic utility, qualities he believes Bitcoin fundamentally lacks. Jürgen also critiques of Bitcoin reserves serves as a powerful reminder of the skepticism that still surrounds essentially Bitcoin, within traditional financial institutions. His warning about volatility, lack of economic necessities, and the risky nature of Bitcoin cannot be ignored, especially in the light of recent market events and significant crypto liquidations. While prominent champion Bitcoin is essentially disruptive potential and long-term value prosperation, voices like Jurgen urge caution and highlight the inherent uncertainties. Ultimately, the debate around Bitcoin's role in the global financial system is far from settled, and understanding both sides of the argument is crucial for making informed decisions in this rapidly evolving landscape. Look, I agree 100%. 100% essentially, I agree regarding, Bitcoin. Look, it doesn't react the way it's supposed to do. In macroeconomic events, Bitcoin doesn't react in a positive way. In inflation situation, it doesn't react in a positive way sometimes. It doesn't follow gold's footsteps, even though it's titled essentially digital gold. It doesn't react well essentially to scenarios of war. It reacts the opposite of gold once again. There's many reasons, there's many issues wrong with Bitcoin. And the side where, it can be printed too much. And that's not my words, it's BlackRock's words, one of the biggest Bitcoin ETF holders, where they said to their essentially clientele on an advert where they can't guarantee the supply of Bitcoin will forever stay 21 million supply token or 21 million supply token. But anyways, putting all of that to one side. The European Union, just want to give you a heads up, they're not against cryptocurrencies, they're just against Bitcoin. Just want to give you a heads up. For example, the Czech Republic, once announced from their central bank that they want to, the governor of the Central Bank of Czech Republic once announced that they want to do a Bitcoin reserve. And the European Central Bank immediately, 24 hours later, shut it down and said, nope, you're not doing that. 24 hours later, the governor of the Czech Republic Bank came out and said instead he wants to do a mixture of assets, which then the European Central Bank didn't reject to. So it's just that the European Central Bank is rejecting the idea of a Bitcoin only essentially reserve type of asset, but they're not rejecting a basket of essentially assets coming together in any sort of a way. It's just they're against the idea of Bitcoin only. Look, it makes sense. I'll be honest. It makes an incredible amount of sense. As I said previously, a basket of cryptocurrencies is always better than just a Bitcoin reserve. And if anybody tells you otherwise, it's because they're Bitcoin maxis and they're just selfish. All they care about is their own profits rather than fixing countries' debts. Now, before essentially we talk about the next topic on tonight's live, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer the questions you may have. So let's go to the comment section first, and then we go straight into the next news regarding US Treasury yields, which also with some data coming out soon as well. Let's see where we were inside the comment section first, and then we go straight into the next news. We were at here. Lena, good to see you as well. How you doing? Hello, Miles and CMF. My apologies, I'm late. No problem, Lena. Good to see you. How you doing? I advertise the CMF live show every day on X and repost other CMF members' posts as well. There is 1,500 people-ish I follow is on TikTok, not on X. Let's go, Joe. Thank you so much for that. Golden Dragon, good to see you as well. How you doing? How you been? Hi, Miles. I hope your back is better. It's doing a lot better. Thanks so much for asking. Good evening, Miles and all CMF. I hope everyone is well. Adi, good to see you as well. How you doing? How you been? Share the live. Let's go, Scott. Hello, Miles and CMF. I hope that all you had a great day or evening. Let's go, Scott. How you doing? How you been? All of this is all suspicious of what's happening. It is regarding the market space and regarding the timelines of all the drops. Very suspicious. Share the live. Hello, Miles. Hello to my CMF on YouTube. Let's go, Scott. Crypto influencers doing too much. Thank God for Miles. Thank God for Trump, who won. Facts. As I said previously, thank God Trump won. Honestly. Happy Pisces. Good to see you as well. How you doing? How you been? Follow China observers. China is in a depression. Yeah. Yes, I agree. Mark, 100%. If Elon goes ahead with essentially a live audit of the Fort Knox and the gold isn't there, would that cause a black swan crashing all of the markets around the world? Yes. If essentially Elon Musk goes to Fort Knox and does a live video showing everyone Fort Knox and there is no gold in there, then yes, the entire world market will be pretty much on verge of crashing. Stock market will crash instantly. Crypto market will crash straight after it. Crypto market will become a lot more volatile again because we don't have any regulations in place. But yes, that will cause a massive event inside the world. It could even be on the word of black swan type of scenarios. Now, the question remains: is it going to be empty? Now, America's gold supply, it's impossible for America's gold supply to be empty. Impossible for it to be empty. And they wouldn't show it if it was empty either. Because if there is no gold, for example, if there is no gold in America's essentially Fort Knox, if there are no gold in Fort Knox and they do a live video and there's no gold, stock market crashing has impacts on Tesla and SpaceX and everybody else. Just a heads up. So what I'm trying to say is, with the amount of gold America has taken from other jurisdictions around the world, it's impossible for it to not have a very, very large gold supply. So the chances of, because there's a lot of people, going around rumoring that Fort Knox is going to be empty. There are no gold in Fort Knox in any sort of a way. That's not a good thing. Just want to, give people a heads up. If there is no gold in Fort Knox, that's not a good thing or a positive thing or something you should be cheering towards. People really need to know which side of history they want to stand on. People genuinely need to know what side they want to stand on. Some people who are Americans who are standing against the US dollars. If the US dollars drops, you won't be able to buy bread with your money. You won't be able to buy food. You won't be able to pay for your electricity. You won't be able to pay for your gas, which means absolute chaos. So honestly, there are people in America, even though the US dollars might be overly printed, might be useless fiat currency, whatever the case may be, but people in America who are in favor of the US dollars going to zero, you've got to realize the repercussions. You can't just be saying random words and not thinking just for a second about the repercussions it could have on you and your family living in the US with US dollars, where it means you won't be able to pay for anything. It means no food, no shelter, no lights, no electricity, no fuel, no nothing. What are you going to pay with? It'll be absolute chaos. So people really need to think before they open their mouth. So if anybody out there is cheering for, not saying you are in any sort of a way at all, Joe in any sort of a way, but people are out there, in favor of the US dollars dropping or in favor of there's no gold in Fort Knox, you've got to know what side of history you want to stand on. Because if you're saying these things, you're not thinking about the repercussions later on, which are going to be absolutely immense, incredibly immense. So you've got to really realize what side of history you want to stand on, the logical side of history or, the moronic side of history, where you're praying and hoping for your own downfall. If you're hoping for the US dollar's downfall, you're hoping for your own downfall because you're the one who uses the US dollars to, if you're especially American, to spend. When it comes to other countries, our countries are relying on the US dollars because that's how we do trade internationally. So if you're in America and you're hoping for the US dollar's downfall, it's crazy if you're doing that because you don't understand the repercussions of what it will have on you and your family holding the US dollars in America. It just blows my mind when people write on X, I hope the US dollars goes to zero. Look, I get it. It's a useless currency, it's overprinted or whatever. But if it goes to zero, you're the one who's in trouble. The guy that's tweeting, I hope the US dollars goes to zero, you're the one who's going to be in trouble. What are you going to pay with to feed your family? Handshakes when the US dollars goes to zero? How are you going to put fuel in your car? Kiss the guy on the cheek at the petrol station so he puts fuel in your car? And say, thank you so much. How are you going to pay for food? How are you going to pay for shelter? How are you going to pay for gas? How are you going to pay for electricity in your house? So you really got to think about the things they're saying. And then the people that are tweeting about essentially, the people that essentially pay, the people that are relying on the Fort Knox situation to be empty, to be no gold. That's a bad thing. That's not a good thing. That's a very, very bad thing if there's no gold in Fort Knox. But I don't believe that it's going to be empty because they wouldn't show it otherwise. Because the repercussions will be so drastic, it will impact the people who are also showing it. Elon Musk owns 3 companies. 2 are public. The stock market goes down, his companies go down too. Trump also has companies that are public as well, so it's not going to be empty. There's no chance. But also, just thinking about all the gold that America has taken, it's impossible for it to be empty. But yeah, stop betting on the wrong side, because a lot of people are betting on the wrong side. You're betting for the US downfall, for no gold inside of Fort Knox. You're betting on the wrong horse. Let's just say you're betting on the wrong horse. When you bet on those things, you're betting for your own downfall as well. But it can cause a black swan event if there is no gold inside of it. What's the chance of that? Very slim. Watching on YouTube and they have commercials on this live, is that something that's new? It's never happened before. Yes, YouTube does commercials on the live. X does not. I live 70 miles away from Fort Knox. I pass the gold location often with triple security perimeters and roving essentially guards, and no fly zone doesn't indicate to me that there is no gold there. US. Yes, facts. Same. It's impossible for that place to be empty. Of course it has gold. But obviously, all of this is causing a massive distraction. Everybody's focused on Fort Knox. Is it empty? Does it have gold? Of course it has gold. How could it be empty? If it was empty, they wouldn't show it on live. Because the people that are showing it on live are people who have public companies who will also be impacted when the stock market goes. So people really need to start, not everyone, not anyone here, but people who are tweeting out these types of scenarios. But yeah, I agree. And Joe, it can cause black swan events if it is empty, but it's impossible for it to be empty. It's a very slim chance. It might not be the exact amount they're holding. It could be less, essentially bullions, but it's impossible for it to be empty. Now, US Treasury yields records low as investors await key home essentially price data. So remember, don't hope for the downfall of the US dollars. Don't hope for the downfall of having zero gold in Fort Knox, because that's the downfall of you as the consumer, from the retail section. The yield essentially declined regarding US Treasury bonds as investors continue to digest Trump's administration's policies and uncertainties. So what we're going to talk about now essentially is regarding US Treasury bonds and yields and what's really happening on that basis, and new data that we're waiting for as well to come out very soon. So here it is. US Treasury yields record lows as investors await key home price data. The yields essentially declined as investors continue to digest Trump's administrative policies and uncertainties. The 10-year Treasury yields dropped to 4.34%, while essentially the 2-year Treasury yields dropped to 4.12%. Investors look forward to the S&P, essentially CoreLogic, Case-Shiller, and national essentially home price indexes. The index shows how changes inside the US single-family home prices and will feature the 3 months through December. The data that's going to be coming out is going to show us the last 3 months of December, essentially. Friday's release of the personal consumption expenditures, the PCE, essentially price index, will give Federal Reserve officials more information about January's essentially inflation path. The data will also inform the Fed on its rates in terms of cut decisions as well. So this Friday, we're going to get some data coming in from the PCE, which will give the Fed a perspective on rate cuts, yes or no. A January essentially consumer price index revealed that inflation rose by 0.5%, putting the annual inflation rate at 3%. Josh Janner, essentially an investor strategy analyst, reported that the Fed was unlikely to cut interest rates further after the CPI reports. And in December, essentially, the Federal Reserve cut interest rates by 25 basis points to 4.25% to essentially 4.5%. And the Federal Open Market Committee commented that economic activities had continued to expand at a solid pace. It revealed that essentially it would consider the extent of timing any additional adjustments to the target range. The Fed Chair Jerome Powell noted that the Fed evaluated Trump's proposals but did not incorporate them in the decisions to cut rates yet. Jerome Powell emphasized that the Fed would essentially do better understandings of the policies once they were implemented. He revealed that the Fed would be cautious before any further rate cuts to happen. And the chair added that it would be essentially appropriate to move cautiously and to look for progress on inflation. The Federal Reserve announced in January's meeting that it would maintain interest rates at 4.25% to 4.50%, and that policymakers are committed for the inflation rose in January after December's rate cuts. Now, Jerome Powell said in a press conference, the central bank was not in a hurry to revise its essential rate cuts since the economy remained strong. He added that the Federal Reserve did not know which countries would be affected and for how long the effects would last. He's talking about the tariff situations. But in general, we have data coming in, this Friday, which would give us a better perspective of what Jerome Powell is going to do, rate cuts or no rate cuts. So this Friday, we have data coming in. March 5th, we have something else coming in. And even April, essentially, 12th, we have something else coming in as well. Now, what we're going to talk about, moving on essentially from price indexes and the rate cut situation, that can have a very positive effect on the market space if we do have rate cuts, as an indication that traditional market space is not doing too well, which would be a hedge against essentially cryptocurrencies, would be a hedge against that. Now, Binance is what we're going to talk about next. Why are we talking about Binance? Well, because of what Binance's CEO has said, Richard Teng. Binance's CEO, Richard Teng, the recent market drop is a temporary retreat, not a reversal. Binance's CEO has come out and said that the market going downwards, or the turbulence we've just experienced, isn't a reversal inside the market space. In other words, he's telling everyone we're not going into a bear market. Binance's CEO, billion-dollar company, said we're not going into a bear market. This is not a reversal, but just a essentially temporarily drop. For example, he says, so Bitcoin essentially returned to its levels from the end of November 2024, completely essentially reversing the US election narrative and Donald Trump's influence on crypto hype. BTC accelerated its drop towards $86,000, sparking comments from Binance's CEO Richard Teng that the move was essentially a temporary retreat. The current market turbulence is a tactical retreat, not a reversal. It's interesting that Binance's CEO used the words, what's happening inside the market space now is tactical. In other words, coordinated and not a reversal. In other words, not a bear market. Wrote Binance's CEO Richard Teng. Now, the past 2 days caused the market to panic as Bitcoin extended its essentially drawdown from its all-time highs. Richard Teng believes crypto can bounce back even stronger, as it's shown essentially after similar stress tests. In the perspective of Richard Teng, the CEO of Binance, this is not a bear market, but just a turbulence, and that this is tactical on what's happening inside the market space, in other words, a very coordinated manipulation, and also that the market, in his words, is going to bounce back even stronger. This is not a bear market, it's temporarily, he said, and that it's going to bounce back stronger. Binance went through $334 million in total liquidations in the past 24 hours, a level that is unusual for mid-cycle essentially drawdowns. The Binance liquidations were essentially surpassed only on Bybit, which turned into the most active essentially market in the past 24 hours. Despite the price fluctuations and break below the $90,000 range, Bitcoin has not seen a significant essentially drawdown in the past halving cycle. In other cycles, the depth of the bear market erased 70 to 90% of its value, but this time Bitcoin has seen corrections up to 25%, because that was an actual bear market when you get 70 to 90% situations happening inside the crypto space and legitimate crypto assets. That's when you're seeing signs of, okay, now we're in a bear market. But we're not in a bear market. Even Richard Teng, the CEO of Binance, is telling everybody this is not a bear market. This is just temporary, and we're going to bounce back even further. And what's happening now is just tactical, which means coordinated manipulation. In short term, the BTC move followed by the liquidations of short positions of all the way down to $86,000, as some traders predicted. The liquidation essentially affected other assets, shifting the available liquidity. And after the recent drawdowns, the crypto market will remain with a peak inflow essentially of stablecoins, potentially moving the next big trend while abandoning essentially narratives. The Bybit hack, followed by the significant liquidations on the exchanges, was another essentially stress test. was additionally another stress test inside the market space, and BTC has recovered after more significant liquidations. But this time, a general loss of sentiments may reverse essentially a recent relatively easy, essentially, rallies. Historically, Bitcoin retains relatively low volatility. Even bull cycles have shown resilience continuing after drawdowns of up to 40%. However, the latest post-halving market enjoyed an outsized mainstream attention and caused high expectations of always growing market spaces. For crypto, it's interesting how Richard Teng said, always growing market spaces. Always growing market spaces is what we're in right now. For crypto, there are, especially when we go to rules and regulations and utility happens for cryptocurrencies, always growing market space without a doubt for some crypto assets, legitimate crypto assets that have utility purposes and contracts and licensing in place. For crypto, there are a few mechanisms to essentially forestall losses. Even when there are dedicated buyers and holders, liquidations for leveraged positions still cause significant price swings. The market is becoming better at observing the losses, and exchanges are more liquid with new inflows of stablecoins. Despite this, the market sentiment has changed dramatically, with traders showing extreme fear of opening new positions, and Tang essentially stronger. So, Binance's CEO coming out publicly and telling everyone in his sentence of essentially, this is just temporarily, it's not here to stay, it's not a reversal, and what's happening now is tactical. In simple words, he's saying that this is not a bear market, it's temporarily, and that what's happening now is tactical, which just basically means that this is a tactical manipulation. And that the third thing he said is the market is going to bounce back even stronger. So it's not just me saying we're not in a bear market. It's not just the institutions showing everyone that we're not in a bear market when you have Morgan Stanley, Citibank, and everybody else from Wall Street and Bank of America getting ready, essentially, for a major, essentially, capital of inflows coming in from institutions, with Morgan Stanley lining up, helping blockchain companies, Wall Street helping blockchain companies, Citibank helping blockchain companies, Bank of America helping blockchain companies, the SEC dropping cases one by one. These are all indications of a positive market space that we're heading towards, but it's just been overshadowed by the hiking situation of Bybit and the token releases for certain crypto assets like Solana, for example, 2 billion token releases. But even Richard Teng, the Binance CEO, coming out and saying to everybody, like, listen, this is not a bear market, it's temporary. We're going to bounce back even better. And that what's happening is tactical, just means pure manipulation. Now, what I want to talk about next, moving on essentially from Binance's CEO's perspective, which is massively positive, but again, it's been overshadowed. Most people don't know what this man said. 2, and that's what he said today, Ripple. Ripple has ignited XRP's coin's vision for decentralized finance. So Ripple released something today regarding XRP, where they discussed essentially what XRP is going to be achieving for Q2, Q3, Q4, and so on. Now, this is what essentially was some of the things that was said. XRP coin, one of the largest altcoins by market capitalization, has been embroidered in the legal battles for years. The legal pressures have hindered Ripple's efforts to advance technological improvements and ecosystem construction at desired pace. However, hopes are rising that the changing stance of the SEC following Trump's administration arrival, leading essentially to a fresh perspective to cryptocurrency regulations. Ripple has recently shared a detailed assessment regarding activities and goals in the DeFi sector for XRP Ledger. The emphasis here is on the initiatives taken towards institutional decentralized finance, a crucial area for Ripple as it works to build infrastructure for banks and financial institutions. Efforts are being made to position the XRP Ledger as a secure, scalable, and attractive Layer 1 solution for financial institutions through rapid approval times, low fees, compliance-friendly architecture, and features like native DEX. Once again, Ripple has shown how XRP is going to be essentially a key player when it comes to institutions. The future price of XRP coin is directly related to the strengths of XRP developments, and also be made regarding identity credentials based on the decentralized identity DID standard, DID. And additionally, a multi-purpose token standard will also be launched in response to corporate needs. And this will essentially open up avenues for financial institutions to lend and provide secured loans on the network. So Ripple has just shown to the world how XRP, playing this key role within, what they're trying to build, and getting involved more on the side of lending and borrowing to institutions, getting more involved on the side of custody services, getting more involved on the side of essentially identity services, and that on the network for loans being tokenizations were issued with the support from stablecoins as well. Now, in summary, Ripple positions itself as a lender in regulated on-chain financing while continuing to shape the future of institutions through DeFi, through innovations like automated market makers and new tokenization standards. Ripple has just shown to the world pretty much what the next steps are going to be. And the next steps is for the financial sector, the institutional sector, is that they're going to get more involved in tokenizations. And these are the roles that XRP is going to be playing. They're going to get more involved in tokenizations. They're going to get more involved in custody services, more involved in lending and borrowing services, and more involved essentially in the identity section of the financial institutions as well, which I love that they revealed it, to be fairly honest. And on top of that, Ripple did essentially just release this of what their next steps are going to be moving forward for Q2. RLUSD, Ripple's stablecoin, has increasingly printed a lot more RLUSD because in situations like this inside the market space where the market is not doing too well, stablecoins always do the best. Hence, because people will sell their assets and go into stablecoins, because hence the word stablecoin, to stay stable. A lot of people are using RLUSD now instead of some of the tokens out there like USDT and USDC. I'm not saying RLUSD has taken over USDT in any sort of way, because it hasn't yet, but it will sometime down the road. But RLUSD is printing more than ever before, which is great news for essentially XRP Ledger, great news for XRP as well. And on that note, essentially of that, CEOs are still in favor and entering the crypto space, and we have Nasdaq applying for essentially more ETFs, and on the basis of the China essentially and Trump situation, which I explained, 3 days down, 3 days up is how it's going to be until we have regulations in place. Ripple are reducing their plans moving forward, and Richard Tang, the CEO of Binance, telling everybody that this is temporary. It's not going to have major effects. We're not going to go a reversal. We're not going into a bear market. This is not in any sort of a way a bad thing, and that we're going to bounce back harder than ever before. Not my words, Richard Tang's words, CEO of Binance. Just goes with everything else with the institutions. And the SEC dropping another case, Uniswap case, which is a major news, but again, it's been overshadowed by Bybit's hack situation, which in Richard Tang's words, tactical. Or my words, coordinated. On that note of there are still good things happening inside the crypto space, but they're just being overshadowed by the amount of nonsense noise that's going on inside the crypto space right now. Don't get distracted in any sort of way. Don't get distracted by the noise. The high-profile players, the high-profile clients, the high-profile institutions are all entering one by one, alongside the SEC dropping cases one by one, and the Nasdaq applying for more ETFs. They wouldn't apply for more ETFs as the market is about to crash. So, on that note, all good things must come to an end, which they have now. So tonight, this was the endings of tonight's live. This was episode 269 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. I'm the host of this live that you're tuning in right now to. You can tune into this live Monday to Friday, 11:25 p.m. UK time onwards. On this slide, we'll talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations. Vital information for you to know about regarding the world completely transforming into a digital space. And I always try to simplify everything down as much as I can so everybody can have an understanding. But we're not in any sort of way in a bad market space at all. We're just in a very manipulated market space. Why we're in a manipulated market space? Because we don't have rules and regulations yet. But the SEC is getting there. They're dropping cases one by one. The next logical step will be regulations, so don't worry. But we have reached the endings of tonight's live. Night Miles of CMF, Pablo C tomorrow, same time as usual. You're greatly appreciated, Miles. Have a great night, buddy. Let's go. Leader, see you tomorrow, same time as usual as well. Good night, Miles and CMF. Mike, see you tomorrow, but at the same time as usual as well. So reassuring listening to you. Thank you for a great live. Good night, and see you at the same time tomorrow. Let's go, Autistic. See you tomorrow, same time as usual as well. Good night, Miles, and thanks for the great live. See you tomorrow. Free Feather, see you tomorrow, same time as usual as well. I'll see everybody tomorrow. Same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. Also, by the way, just one more time, thank you so much. Leave a comment, like, and share for support. Great, Miles. Take care all. Let's go, Ray. See you tomorrow, but at the same time as usual. What Ray has said inside the comment section is facts. If you get a chance, straight after the live, drop a comment on. If you watch us on X, drop a comment, drop a like, drop a retweet. Follow already if you're not doing on X, and tune in every single live Monday to Friday. Tune in tomorrow, for example, for episode 320, for episode 270 tomorrow. Like, comment, share, retweet if you're watching this on essentially X. Comment and subscribe if you're watching this on essentially YouTube. I will be seeing everybody tomorrow, same timing as usual. Thanks, Legend. See you all tomorrow, CMF. Let's go, Shelly. See you tomorrow, same time as usual. Thanks, Miles, for everything. Scott, let's go. See you tomorrow, same time as usual. Take care of yourself too. Let's go, Scott. Thanks for everything, Miles. Let's go, Scott. Good night, Miles and CMF. Stormy, good night. See you tomorrow, same time as usual. Susie, let's go. See you tomorrow, same time as usual. I appreciate you. Please take care of yourself. And well, Scott, congratulations on episode 269. Thank you so much, Scott, for that, brother. Miles is the GOAT. Let's go, Scott. Good night, everyone. Thanks, Miles. See you tomorrow. Orphan, see you tomorrow, same time as usual as well. I will be seeing everybody tomorrow, same timing as usual. Like, comment, share, subscribe, follow, and retweet. I'll see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same timing as usual, 11:25 p.m. UK time, or just subscribe and follow and turn on the bell notification icon. Join the Telegram group if you want to as well. It's completely free. Tune into this live. It's free. Telegram group is free. And we have an X communities page as well, Crypto Mouse Family Lounge, which you're more than welcome to join. Hi, Miles. Can you possibly do a little recap? Monica, thank you. Let's go. See you tomorrow sometimes as well. The recap I can give you a little brief of it, of what we talked about. So on tonight's live, we talked about essentially Mav. On tonight's live, we talked about Ripple essentially showing their roadmap of how XRP and the RLUSD is going to be used. We talked about essentially Binance's CEO Richard Tang telling everybody that don't worry, the market space isn't going into a bear market. It's just temporary. We're going to bounce back even harder, and that this is just tactical. In other words, manipulation was happening inside the market space. We talked about the US Treasury yields, essentially record lows, and the data that's going to be coming out on Friday. We talked about the urgent warning from the European Central Bank on tonight's live, how the European Central Bank is telling essentially other banks in the EU that they can't be using Bitcoin as any sort of reserve asset because it's still very highly speculative. We talked about essentially China outlining their 2025 plan and economic targets on uncertainties over essentially the Trump situation. Trump and China going back and forward causes 3 to 4 days of market manipulation inside the market space. But what Trump is doing is a positive, and the sooner China backs down, the better it is. Then we talked about the Nasdaq essentially filing a grayscale Polkadot ETF, which is great news. It's a positive news for the market space. Nasdaq wouldn't be filing in more ETFs if the market space is about to go into a bear market or crash, which is an indication it's not going to. Another indication is not going to. We talked about how essentially MicroStrategy could be liquidated, but what's the chances of being liquidated? We also talked about other aspects of MicroStrategy as well in terms of their Bitcoin routes and their stock prices on MSTR. We talked about also on the SEC dropping the Uniswap case as well, is what we talked about tonight's live, which is another massive positive regarding the SEC dropping cases one by one, and again being overshadowed by the distraction and noise inside the crypto space. So that's what we did on tonight's live. That's what we talked about tonight's live, Mav. So that's your recap. I'm an OG of the CMF show. Let's go, Scott. Scott, let's go. Thank you, Monica. Let's go. See you tomorrow sometime as usual. Where the lounge located? Our X Spaces. We have an X Spaces lounge as well. Good night, Miles and CMF family. Let's go, Frankie Brother. See you tomorrow sometime as usual. We have 2 Telegram pages. One, the CMF lounge. One, the CMF in general. We have a lounge essentially on X Spaces as well. And then we also have this live, and they're all free. Good night, everyone. David, see you tomorrow, same time as usual. Thank you, Miles, for a brilliant live as usual. Night, Miles, and CMF. Let's go. I'll see everybody tomorrow, same time as usual, 11:25 p.m. UK time onwards. See everybody tomorrow, same time as usual. Like, comment, share, retweet, follow, subscribe. Have a great night. Have a great day. See everybody tomorrow for episode 270.